The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you get the Dow up 208, NASDAQ up 72, S&Ps are up 26. Gold is down 1080 at 1116. You get silver up 10 cents at 1468. You got to watch that. It's going to be really great watching this gold and silver market, folks. The reason being is that silver is not getting whacked. They whacked gold. Bottom line, I suspect that is not going to stay down. That divergence is pretty intense. Platinum's up $3, trading out at $9.19. We have copper up 10 pennies at $2.35. Light Swedes up 10 cents. Bonds, the 10 years back 7 ticks, 30 years back 23. Both of those are holding price really good for the bounce that we're having out here. Euro is down 66, and King Dollar is up 4.17. King Dollar looks like it's not going to make it once again into higher price. Now, let's get over and we take a look at these futures, because you're going to see this is going to be wild. Actually, well, first, let's go look at the E-minis first. So if we look at the E-minis first, what you're looking at is this, is that when we had the expansion yesterday morning, that expansion, first leg up, got into the beginning of where it had some resistance. That resistance there was hanging out at the 1888 area. Well, we just blew through that area. You have an ABC structure on the way up. And the A point on this, so watch this. This is a big ABC. Your A point on this is the lows of yesterday, which is 1862. Your B is 1898. So we got, 36 points. Your C is 1894. That sets you up with approximately, 1930 on your S&P. If we take a look at the cash, what I expect you're going to see out here is this. And this is going to be some nice trading. We'll find out what this is, but my take is that we'll get some nice trading out here. Why? Because this bounce here can take us to 1953.45. That'd be the normal bounce, by the way, folks. When I say the normal bounce, what I've always found is that when you have consolidations in place, and then you have downdrafts in between them, meaning that's what we did when we came off that high again of 2020. For some reason, that's where markets like to trade into. Now, if we look at this and we put this back and just see extension-wise, what type of an extension that would be. That's pretty nice, too. That's about a 786 extension. It's just a little less than a 786 extension on the way up, if, in fact, that's where we get there. Now, watch this, because what you can do is this. You put together where I'll put the SPY up so you can see the correlation here and what I'm looking at. So when we came down, what's sticking out like a sore thumb is the September 18th lows. That's where real juice came off the highs, okay? And then after that, the volume starts contracting. Okay, so on the bounce up, you're looking at, okay, that's a place that you can bounce into. Then what you do is you put together, and this is so cool, whether you're a bull or a bear. If you're a bear, it's really cool, I think. Why? Because we're in the perfect situation with window dressing to get the bounce, okay? And you're just at the beginning of that, okay? So we have today, we have tomorrow. That gets us into Thursday. What that would do, the first is Friday. What that would do is that would heat up the trading on Friday. The bulls would get a little more confidence, push it up again, and then Monday, Tuesday, that's where the decision is going to be made once again. So what you have is that you have the bounce in place, you have the window dressing happening, you're coming into the end of the week, that should keep it going to Friday. Now, let me show you something, because this is what's really cool. Okay, so when you get bounces in bad markets, right? Tomorrow's October 1st. Thanks, man. So, okay, yeah, that's even better, actually. Thursday, Friday. Okay, so watch what you have happening here. When we look at the Dow Industrials, you're up 218. The strength is every single Dow stock is strong, right? Well, the number 2 stock is Chevron. We know that that's gone down and has been down dramatically, 164. The number 3 stock is DuPont. You have to look at DuPont. Because what you have here, and what window dressing is all about, by the way, folks, okay, you got money managers going through, you know, all their stocks, okay, what am I going to buy? Well, they're all buying into the dead cat bounce here. And so, yeah, DuPont go from a price point of $76 down to $47. That's the second leader out there. You always like to see the dead ones as dead cat bounces if, in fact, you're going to sell that market once again. The leader out here is Procter & Gamble. That's up, no, the laggard, rather. The laggard is Procter & Gamble. Cisco is, let's go look at Intel. Intel is number 1. Intel is up 89 cents, and that's not a bad setup. You know, Intel's been in a consolidation down from 34, hit 24. You know, you're coming into a swing point. Not a huge amount of juice into the swing point, but that's not a bad setup. We do the same now inside the NDX 100. The leaders inside the NDX 100 is that Western Digital. That's up $9.43. Oh, that's a trip. No, that's a dead cat bounce too, though. But it's pretty cool. So that went from 108 down to 67. Bounces up today. Next, that's the first one. Number 2, this stock is a psycho, man. This is a trip. BioMolin is up 8%, and that trades like, man. So this stock went from $151 down to $95 in 3 months. So you get the bounce going. So you get the gist of it. Now, what can you know, this morning on CNBC, this was a trip listening to this, okay? So the mantra out here in the financial press, folks, was that the sell down was all about the aspect that money managers were illiquid and they had to basically cash out of equities, okay, you know, for basically you and me and someone else saying, okay, I want to get out of the market. Well, check out how this works. The thing that's amazing, they're absolutely right, okay? It's, you know why, folks? What they didn't say, it's supply and demand. And this is what ends up happening. When you have markets that everyone's in and no one has any cash and everyone's leveraged, guess what? That's not a market. You know what that is, folks? That is you buying something and you hope that another, excuse the language, sucker comes along and you're selling it to them. That's what that is. And the amazing part to me is that they didn't even realize what they were saying. It's like, yeah, that's exactly it. That's right. There's, you know, you're not buying this for earnings, okay? You're buying this just to sell it to someone else. And that same correlation goes inside the real estate business. So what happens in the real estate business, what we blew up before, that is who has the last chair. If you buy something and you're only buying it not to make an earnings play, and if you're only buying real estate just to flip it to someone else and the rent doesn't sustain itself, that's insane. You are basically stepping on the cliff on a continual basis. Every morning you're walking on that cliff and you're just hoping you're not going to fall off. And you're hoping you're going to sell it to someone else, and good luck to them whether they fall off. It's perfect, folks. And, you know, whatever type of investment you're in, keep that in mind, okay? Because when you're young, you know, yeah, you'll take more risk. And I'm a monster risk taker. But guess what? The bottom line is that they better cash flow. Because when they cash flow, if your risk is wrong, what ends up happening, you're not dead, okay? Then it's a longevity type of deal, okay? 877-927-6648. Let's go take a look at some of the higher volume stocks in this market. Bank of America is up 13. You got Facebook, 13 cents, that is. Facebook's up 240. You have Ford up 21. Microsoft's up 41. You got Seagate Technologies up 211. We take a look at some of the Dow stocks out here. Big Blue's up 263. Honeywell 143. Oh, they got this bounce going good. This is beautiful, man, for all you bears out here. It's good for you bulls, too. The bottom line is that you bulls out there, you better make sure that you get your stops in because you get another shot here. Nikkei in Japan, folks, that goes up $457 last night. Still not inside the range. Okay, so what you have with and now this is what's so cool. So listen to this. The range that we broke out of the 25th, 17,747. It goes down to 16,901 with monster volume, 2 billion shares. Last night we bounced with 1.5. That's saying that Japan is also going lower. The Hang Seng was up 289 last night. Same setup. Hang Seng went down the prior night with 2.6 billion, up last night with 2.1. If we go over and take a look at Europe, and this is where you do those correlations, put them together. We get the FTSE up right now, 2 1/10. DAX is up 2 3/10. The CAT is up 2.6. If we go over and we take a look at the DAX first, because the DAX is the one that was breaking out its lows yesterday. It saved itself, but it was breaking out its lows. The DAX got down yesterday. Let's see. Yeah, it was light volume. So the DAX was 111 million shares going against 156. So we'll see what type of volume the DAX gets in right now in order to basically keep this consolidation in place. Bonds are still holding up pretty good for this market. So what's really going to be cool here is watching, I see what's happening. Okay, 1 second. So bonds right now, the 10-year is only down 4 ticks. We've done 536,000 contracts. Hey, we'll see whether they do 1 million contracts. If you do 1.1 million contracts, that's saying it still wants to hit those highs. This is Tom O'Brien. This is TFNN. You stay right there, folks. So come right back. Dow Industrials up 219. Nasdaq up 83. S&Ps are up 28. We got ABC structures all over the place on the way up, folks. Gonna be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 1.4%, Nasdaq's up 2, the S&Ps are up 1.5%. And we look at this market. If we go over these ABC structures, folks, here you go. Okay, so inside the NDX 100, okay, the Qs, your A point is now this is the most conservative way of doing it right now. There's actually a bigger one out here, but the most conservative way would be you have the A point and the futures here at 41.03. Your B is up there at 41.38. You get 36 bucks. Your C is at 24. So 36, 46, 56. That hit the first one right off the bat. That's 41.61, which is an absolute mind blower. Okay, so that's the smaller one. Now watch the bigger one. Okay, that's in the NQs, right? The bigger one goes like this. Okay, so we take this out here. The bigger one is going to go from last night low of 4042 up to 4138. So you're talking about 98 points. Your C point is 4124, which is going to give you 5120, right? 5120. Oh my God, it's going to give you 4220. Yeah, 4220. And that 4220, by the way, can hit today. This is what's going to be really so wild. I don't expect we're going to have that today, but I think you can get to 4190 real easy. The reason I'm saying the 4190 is this. 4190, folks, 4185 to be exact. 4185 was the low that was generated at 15:30 hours on the 25th. That's the, there's some big juice down there. So, like when you finish an ABC structure, they're tired, okay? Just like running a marathon, swimming, whatever that is. But, that's game out there. That's not bad. That's another 35 points on top of the 84 that we have right now. If we go take a look at the S&Ps, inside the S&Ps, what you have is that you take, now this is the longer term one. Longer term one would be 62, 1861 up to 1900. So you get 39 points. And that would get you at 1936. And right now we're at 1905. And if we bring this across, what you are going to see at 1912, the S&Ps are going to get a little resistance. So you're at 1904, 1936 is the number out there. It's going to be intriguing seeing how this shakes out. Let's go over to the IBB, because inside the NASDAQ, of course, it's all about the IBB. So that baby's up $12.60 right now. And, oh, look at this. Okay, she's going to get it. So check this out. Now, this is when it's subtle, man. I love it when this happens. And this is what it is. So watch this, folks. The IBB, it just gapped open, okay? Gapped open, well, it didn't gap open yesterday. It ran yesterday, and it couldn't hold price. It couldn't hold the 301. They sold that thing off all day long. Now, what happened here is this. You gapped open, and it went sideways at 303. Then what ended up happening is it watch this. The last 10-minute bar, you did 317,000 contracts, right? And you didn't hit the swing point. You didn't move, folks. If you get my book, The Art of Time in the Trade, you know what's going on there. What's going on there is that is a monster that's coming in right now, pushing that swing point. That swing point more than likely is going to get blown away. Now, if that's what you get, then you got an A point at 86. You get a B point at 303. So what do we got? That's what? 16? No, 14. That's $17. That'd get you up to 315. Where's 315? There's she. 309. 315 is not bad. You get 315 cooking in the IBB. That composite will get some juice underneath it. No doubt. Apple is, oh man, Apple's going to get killed, folks. So check this out. Apple yesterday, bottom line, was vicious, okay? When Google came out with their phones and their tablets, right? Apple went from 113.51 to 107. Now, 6 points, that's not a big deal. Expansion of volume was a huge deal, folks. 73 million shares. Apple is going to basically build cars to get into the price point of 103.50. And what that is setting up more pain and heartache inside the NDX 100, inside the composite, after we bounce here for a few days. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials. Well, let's give you some Dow stocks. You got Walmart up 65. Honeywell's up $1.64. I must have green glasses on, man. That's all green, folks. You stay right there. We're coming back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is up 214. You get the Nasdaq up 90. S&Ps are up 28. Let's go take a look at this which kind of volume we have in this market. You're at 190 on the NYSE, which is good, by the way. And on the Nasdaq, you're at 494. So we're going to push. Now, this is really cool. So watch this. This correlation is pretty cool. So we're pushing with volume right now. And that would totally make sense. Why? Because you get shots that are caught on one side. Bottom line, they have to close it out because it's going to be fast, furious market. You get longs that want to get in, basically set up the next couple days to get the bounce going. Then you get the shots that are bears that were closed and that want to go long and want to push the market higher. Okay, so you have all of the above. Now, you're going into the 28th. And the first day off of this, that's what you're going to be looking at. And you're going to be looking at, okay, where is the contraction as we move up into the 18th? 22nd. Okay, hold on. Let me put the S&P up here. So we take a look at this correlation. I believe it's the 18th we're benchmarking. No, it's the 22nd. How did I do that? No, it's the 18th. Okay, it's the 18th. So the 18th. So as we climb up into that area, oh my God. Oh, this gets interesting too. That's right. That was option expiration. It's 2.5 billion. That's all right. That's all right. Doesn't matter. The bottom line. Now, this is where it gets interesting, folks. So the 18th was option expiration at 2.5 billion on the NYSE, and on the Nasdaq, what happened is that it had 3.2 billion. And you can make the case that, hey, that's option expiration. Bottom line, you're going to get higher volume anyway. And you are. But what I found out over the course of years, that guess what? The bulls could have had the chance to get higher volume on the highs, take out the highs, and go dramatically higher. And I've seen that aspect of it, too. Bottom line, that isn't how it came down, though. So what that does set up is that I suspect that's going to be the first place. And what's so cool about that is this, is that up at that level, even if you're wrong, if I'm wrong, and that this is not building cause for lower price, you'll get such vicious resistance at that level anyway. It'll still be a great trading area because you can trade off that. It'll pull back off that area. Then what you'll be looking for on that pullback off, you'll be looking for, okay, do we have any juice on the way down as we're coming off of that area? Let's go back over to the NQs for a second, because what the NQs are doing is that they're making the run right now. And this is, they built cause for about 30 minutes as we've been on, and they just broke topside again, and they're going to have the juice here. Let me just put this in. So when you take a look at this, we built cause. We come on at 10 o'clock. They built cause for 30 minutes, going sideways. Your next leg is happening right now. It's 7 minutes into the leg. The juice isn't bad. And we're at 4167. The top of this. Watch this. Oh, this is going to be interesting. So the 97 area, we get 30 more bucks into this NQ. This is where, the bottom line is that if you're out there intraday trading, keep your eye on that up at that level, 4197. Because we're already into the bar, and Well, the bottom of that bar, actually the bottom of the bar is 7.3. 7.3 to 9.7 is going to be hard to handle. Now, what will happen is this. As you're up at that area, if we end up consolidating going sideways again for 20, 30 minutes on the 10-minute, then it's going to be awesome, man. Then we can get to 42.50. That would be a total mind blower. We'll take it. We'll take it all, baby. Take it all. Inside the Dow Industrials, we take a look at the Dow. What do you have with the Dow? Oh, this is going to get interesting. See, watch this. The Dow's up 231, but what the Dow's also doing, let me see this. This is going to be cool. Yeah, the Dow, you can almost make the case. This is going to be cool. So the bottom of the 18th on the Dow is 343. Okay, so watch this. This is actually going to say that we could get past that on the Dow. The reason I'm saying that is that the Dow at this level here turned around and has broken the downtrend that was created out here from the highs of the 17th. So that's pretty cool, because then it's saying, hey man, you can go all the way up to the top. This, I'm telling you, for all you tigers and tigresses, bulls and bears out here, this would be just so cool if we could stay in this trading range. Just give us 3 months in this trading range. We'll all end up owning the 4 seasons. I'm only kidding, folks. But the bottom line, it'd be pretty close. No, I'm exaggerating. But if you had a trading range, if we had a trading range that was this large, okay, it would be so cool. It would be just amazing, you know. Now, oil trades like that, okay? You know, the oil loves to trade on these monster trading ranges, you know. Hey, we'll see where it shakes out. That's the bottom line. Inside the NDX, what's still running this baby? Yeah, you get Sandisk coming up. So what's Sandisk doing? Sandisk is up 10%. This is probably a dead cat, too. It's not bad. So Sandisk is up 10%. It had gone from $70 down to $35. Oh my God. See, okay, this is cool. Sandisk. Now this is a classic as to when bounces come in. Sandisk had gone from $108, folks, down to $44. A year and 13 months. Sandisk is a leader out here. It's bouncing 10%. That's what you're looking for if you're a bear. You're looking for the weakest stocks being the strongest when the sectors are bouncing. Because what that is all about is that, listen, you can't bust them down forever. You're not going to bust them up forever. Let's go take a look at a few of the gold stocks out here, because gold is still down. If we go over and we take a look at a couple of the equities, an Eco Eagle, guess what? Bottom line, they can't bust it down. This is pretty impressive, actually. You know, for the aspect that the contract itself. Let's see what we got. GCC 5. Contract's off the bottom too. Okay, so the contract got down to 11.10. You're at 11.13 right now. Ah, I like it. Okay, so check this out. Yeah. Okay. So the first leg down in the contract this morning, 7,300 contracts, right? Gets to a price point of 11.13 off of 11.23. So $10 down hard, right? You do a bounce higher, but guess what? We got higher with 6,900 contracts. Then what does it do? It flushes it. Boom! Flushes it down. 6,000 down. Now you're right back inside. Now that was down. We got down to 11.10. And what that is, folks, that's a flushing out of all the stops. You took them the first time, you took them the second time. Now this thing's going to build cause over this 11.12 area. I expect it to basically claw its way all the way back into the positive. If we go take a look at Rango Resources, Rango is actually going higher today with juice behind the move. We're up $1. 270,000 shares traded. You did 790 yesterday. Franco Nevada, FNV, same deal. She's rejected lower price. Royal Gold. Royal Gold hasn't rejected lower price just yet. It actually has, but you want to see a little more juice inside of that. That just hasn't got it yet. Let me see. Oil. I don't have the oil. The oil numbers came out. Bottom line is that it looks like oil is running because the USO. You talk about some action, man. Oh man, USO when the oil numbers coming out went down to 1446. Now it just popped up to 1476. So that's saying that oil is running higher. Dow right now is up 240. You get the Nasdaq up 95. S&Ps are up 31. And over in Europe, those European markets. Let's see. Yeah, they get 45 minutes left, and they're hanging tough there. You get the DAX up 2.4, FTSE's up 2.3, and the CAT is up 2.3. We go over to the XLE, and we take a look at the XLE. XLE's up $1.60. You get 5 million shares, which isn't bad. It's going to be a close call. Let's see what the ExxonMobil and Chevron's doing. Exxon's not enough volume. Chevron was looking better than Exxon yesterday. Yeah, it is. So Chevron's up 230. Yeah, it's already going to take out one swing point. Chevron's looking good, man. You want to day trade something? Chevron? Let's go look at Chevron. Chevron's up 242. You're going to get some juice in Chevron, though. Yeah, this is a good day trade. You could Chevron. You could put your stop right under 78.43. Give it 20 cents. Give it nothing. Because what should happen here, 77.97. Talking about 250. Yeah, Chevron should just keep running. You know, what it's gunning for right now is 80.47. And it can actually do it. We have, yeah, you're an hour and 15 minutes into the move. You have 2.4 million. That's 6. Yeah, it's going to be 12. That's going to be 13.5 million. That's saying that Chevron's making that run to 81.20. Okay, so now let's go over to Exxon just to see if we can make a case intraday for Exxon. It has no. Look at that. So there's a big difference. There's a differential for you. You pull up ExxonMobil, can't handle the price. Actually, so you got a seller in it versus Chevron. Chevron is the move out here if you're going to day trade something like that. Silver. Let's go to that silver market once again. And I heard one of the targets say that someone was pushing into silver as it got to a certain price. Oh, look at that. They did unload on that. What a trip. Okay, so let's take a look at it. Silver made it up to a price point of 1472. Yeah, but guess what? You know what's so cool? So check this out. You get volume up there, man. So silver's going to be back there. I love these when you have actually, at the high, we get volume. You had 2,300 contracts. Then you come off that high with 1,300 contracts, 1,600, and 1,700. So you absolutely come off the high with volume, but guess what? Your higher volume price point is up there. That's saying it's going to be back up to that level. Pretty intense, man. The silver equities, PAAS, the silver equities have been having a tougher time. There's no two ways about that. You know, PAAS, building cars, but needs more buyers. It's not like they've had sellers, but they need buyers. Heckler, same deal. Great Panther hasn't had the sellers, but yet hasn't had the buyers either. It hasn't had either. Let's see. Take a look at First Majestic. First Majestic's not bad. First Majestic up 14 cents right now. You're at 311. You get volume of 617,000. Yeah, that's not bad because you only need one. We're at 617,000. You only need 1.1 million to really get a higher price with volume. Get ready for another leg up in the market, folks. You can see it. It's coming in right now. Oh, this is going to be a trip watching this shakeout. So check it out. The NDX 100. The NDX 100 is leading out here today. That baby is just and what you have here, folks, is this today. There's no retracements. There's no retracements in this market out here. And if we bust this 4169, like in the next 5-10 minutes, that is how this market will set up for today. Intraday there's always like different markets, but bottom line, it looks to me like you're not going to get the retracements in the market, and you almost could make the case. I think, was it Larry that was talking about this, a rule of alternation? There's a rule of alternation, in mathematics that's pretty cool. And it's a patent type of setup. But if you wrap your head around it a little, I understand it, but to explain it would be a little bit different. I visualize it quite a bit, though. And that is what's happening out there. When I brought up yesterday in the afternoon show, I was bringing up there's a new mortgage for the FHA for the VA loans that's in place starting October 3rd. Bottom line is that it shouldn't tie things up. It was interesting. There's some folks that think it's going to tie things up, but it would only tie things up if the mortgage broker that you're using hasn't been equipped with the best technology. That's what it really comes down to. A lot of it has to do with electronic signatures. It has to do with that the clients have to get all their paperwork 3 days before the close is done. And, I've dealt with not a huge amount of mortgage companies, but the ones that I have dealt with, bottom line, they were electronic 2 years ago. They've had 5 years to get ready for this. So the bottom line is that, maybe some companies are not ready for it. Just ask them, how long they've been doing electronic mortgages. 877-927-6648. Dow Industrial's up 236. Nasdaq's up 92. S&Ps are up 30. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And folks, don't forget you can test drive both my newsletters over at TFNN, absolutely free. You have Market Insights, which is the daily newsletter. You can test drive that 2 weeks. You just go into newsletters, trading newsletters. You can test drive the Gold Report 1 month. You go into newsletters. You go into investment newsletters. We go take a look at LVS for one of the Tigers out here, Las Vegas Sands. That is up 15 cents right now. So the low for the year is 37.68. That low was, it looks like yesterday. Yeah, it was yesterday. The high is 65.83. And, of course, this is the gambling joint. And this has gone one way from $82 down to $37. You've busted out the lows. This is pretty intense. And yeah, I wouldn't be touching this thing. So check this out, man. This is pretty intense. This is saying that this can get down to 26 to 20 bucks. You know, that's the last. Oh, hold it. Yeah. Yeah, because you busted through. Now, this is a classic. If you want to see something that's pretty cool here, folks, you know, when you're doing retracements, the quickest, easiest, dirtiest down way to do it is you just put your cursor on the last time there was any juice in the equity. And in this case, it was, on monthly, it was November of 2010. Well, it sliced right through that at 52. And what did you do? So as soon as you do that, guess what? All you do is just go to the next one, man. That's where it's going. It's making its way down there. You know, we'll see whether it holds at those lower levels. But that's where the magnets come down to. That's what it comes down to. And all those high what those high volume bars are large buyers that were in place at that time, that as they come down to those levels, so that's on a technical basis. On a fundamental basis, what it is, as they come down to those levels, those would be the levels that you would expect that the operators in the equity will turn around and buy their equity back in order to support that position. That's what support is all about, by the way, okay? Resistance is about, as stocks go higher, you know, bottom line, resistance would be as they had already come down, they're getting resistant going higher because why? Because people want their money back. What also happens with resistance is this, is that the longer that the resistance had been out there, the more that it is. And that the reason for that has to do with the aspect that the longer that any of us hold something, and the longer, let's say that if you lost $1,000 and we lose it today, right? Guess what? If it comes right back up, you're being stubborn and you're saying, oh, that's my $1,000, I want my $1,000. That goes 3 months from now, a little bit less. 4 months from now, a little bit less. A year from now, guess what? It's gone. You know, bottom line, what does that mean? That means actually what I meant by that is that resistance gets less. That's how that gets. The reason it gets less, well, it's actually the selling will get more, but the resistance gets less because of the fact that we'll sell into that in a second. Say, so what? I lost $1,000, big deal. You know what I mean? So keep that in mind when you are looking at resistance also. Now, let's go. We got to look at this closely here because this is, in both cases, you know, we're still all right. We went top side. The Q's got to 101.87. 102.86 is the first leg. You get a slight pullback here. We're doing it with, yeah, it's light volume. Okay, really light volume. So this pullback is really light volume. Correlation-wise in the Qs, 533,000 shares in 8 minutes versus 1.2 million. You stay right there, folks. Our man, Mr. Basil Chapman's going to be coming up next with you, growling a problem with you. Then we get, let's see, Daryl Martin, Steve Rhodes, Dave White, myself, and look forward to speaking this afternoon, folks. Have a great one. Have a safe one. Stay right there. Basil's coming right up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.